Welcome back to the study in the Old Rectory in Epworth. My name is Guy Lewis and today I will be presenting session 2 of 2 on business legal entity and its importance. We've covered the business entity in the first video and today I want to look at VAT, particularly non-registered VAT companies, flat rate VAT schemes and the full VAT scheme. So the components we will look at are what are the differences, what are the advantages and disadvantages, and any other benefits or interesting features. So what is VAT? It's a tax placed on all items we purchase. The standard rate of VAT is 20%. So whether we buy something that has VAT included on it, there will be a 20% uplift added to that purchase price. But actually, VAT can also be variable. So as an example, there's a 5% rate of VAT on things like children's car seats or energy saving measures. And there's actually 0% VAT on things like food, books, newspapers and children's clothes. There are also things that are VAT exempt, such as stamps, financial and property transactions. So there are different ways of dealing with VAT sort of purchases and actually VAT exempt purchases. So VAT, we pay VAT on purchases and you charge VAT on products or services sold. And then every year you file a VAT return, or every quarter you file a VAT return, and you pay the difference to the HMRC. So you pay the difference between what you've collected on your purchases and actually what you've paid on the products or services you've provided. So if you're a non-VAT person, you don't charge VAT and there's no VAT returns. Non-business clients' bills are 20% lower because non-business clients don't pay VAT on the top of the price, and it's very, very simple. But you still pay VAT on your purchases, so that if you buy something that you then later provide in your service, you've already paid VAT on it and you can't claim it back because you're not VAT registered. Businesses, however, turn over more than £85,000 a year must be VAT registered. It's possible that a monthly limit may be put on your trading to make sure you don't actually go over your £85,000 per annum limit. Okay, so let's look at the flat rate scheme. What you do here is you charge VAT at a high rate, so that may be 20% on your sales, but you pay VAT at a much lower rate, and that depends on what sort of business you're in, but that can be as little as 4.5%. So actually what you can be doing is actually when you receive VAT at the high rate, but actually you pay it back at the lower rate. It's a very, very simple tax return, VAT return to do that as well. So what are the advantages of flat rate scheme? Well, business clients, it can be 20% cheaper. I'll give you an example. If you have a hotel room that's £100 plus VAT, i.e. £120, the business client would pay that, but would then be able to claim the VAT back. So they claim £20 back, so it actually only costs them £100. Again, the advantage is you can claim through your VAT allowance on the VAT on your purchases. So you can claim back some of that on the allowance you get, and it's a very, very simple VAT return. All you actually do is actually put in your sales for the quarter, and then in effect use that flat rate VAT figure as to how much you would pay HMRC. So the disadvantages is you cannot claim VAT back on the purchases that you make. So that means your costs are higher. Is also you can't actually have a flat rate scheme if your business is turning over more than £150,000 per annum. So the full rate VAT scheme, you actually pay VAT on all your purchases, and then you charge VAT on all the products or services you sell. You then every quarter have to file a VAT return, and actually what the VAT return contains is the amount of VAT you've spent on purchases and the amount of VAT you have received on your sales. So what you do is you pay the difference between what you have paid and what you have received to the HMRC. The advantages of the full VAT scheme is that it can be beneficial for a number of business reasons. Purchases which attract VAT can be reclaimed, but the worry is if you're not VAT registered that sales could easily go over the VAT threshold and make your business liable for that partway through a year. The threshold for that currently is £85,000 a year. If you're registered on the flat rate scheme, and again, you need to make sure that you don't go over the £150,000 threshold, otherwise you'll have to go into the full VAT scheme. VAT can be reclaimed from many purchases, such as company vehicles, refurbishment of buildings and property, large capital purchases, such as fitting out kitchens or bars, and VAT returns are quite easy to be made online. Most accounting packages such as Xero or QuickBooks or Quicken do interface with the HMRC VAT pages. The disadvantages, you are required to make a tax return every quarter, and that charging VAT to non-business clients puts up the bill because they have to, in effect, absorb the 20% VAT that goes on the bill. So if you were looking at whether you should be VAT registered or whether you should have a VAT, go on the flat rate scheme, or whether you should be full VAT registered, you need to look at your profit margins. Gross profit margin is the cost to provide the product service. So a restaurant, it's the food, it could be the cost of the waiter or the chef. And your net profit is that gross profit minus your overheads. And that could be the rent, the rates, the insurance for the actual premises. And what you can look at, even if you're worried about going over a VAT threshold, that increase in sales, that increase of sales to a point where your net profit is much more than what you think it'd be on the increase of the turnover. So it's really is to look at your profit margins to see if that £85,000 cap of being non-VAT registered is actually the best thing to do. So what I suggest you do is get a pen and paper out and jot down what your variable costs are. So this might be the food, the cleaning, the laundry, the cost of additional staff you have to do when you're busier. And then also jot down your fixed costs. So these will be your rent, your rates, your energy costs, your water bills, your insurance, any maintenance you have to, any renovation, and your fixed staff. So these people that you have all the time. And what you're trying to do is trying to look at the different scenarios. So maybe what you should do is look at your turnover now and say maybe increase it by 20% or £20,000 and see if that takes you over the VAT threshold, see how that scales up in terms of your net profit. So scale it with your variable costs, but maintain your fixed costs. So if you've got a low fixed cost but a more variable cost, you may find that going over that £85,000 threshold delivers you better profit. So work the profit out even with the VAT. If that seems a little bit too daunting, go for a specialist. Try out with your existing accountant, go to them and actually ask them to model your business, ask them to do the sort of work as if the business increases its turnover and takes it over the VAT threshold or even the £150,000 flat rate threshold. If you haven't got an existing accountant, maybe use a recommended accountant from friends or other business owners around you, or maybe just ask a reputable business who may be looking to get your business and see if they can help you actually modelling whether you should be looking at increasing your business even if it takes you over the VAT threshold. But then I'd also talk to other people, talk to other business owners around you and see if some of them, if they're in your line of business or even not in your line of business, what have they done? What are their thoughts? What are their experiences about staying either under the VAT threshold or increasing to increasing your turnover to put you in that sort of VAT requirement? So what I was actually saying was, increased sales, but with fixed costs could give greater profit, which would be greater remuneration for future investment for the business, could actually be used to fund a better pension, and could actually help succession and exit strategies. So that's the final session on business legal entity and its importance. I hope you found the sessions interesting and useful.